2021 saw the return of face-to-face customer meetings held mid-June in Wakool, Pine and Finley. This recording showcases the full presentations from Murray Irrigation's customer operations, finance, maintenance and advocacy departments, as well as a presentation from New South Wales Department of Primary Industries on next season's allocation forecast. Up first is Executive General Manager of Customer Operations Scott Barlow with an introduction to the meetings.
I just thought I'd kick off these meetings, these round of meetings, just with a quick slide talking around the company structure a little bit, because it helps frame these meetings a little. The board obviously have oversight over two functions of the company, and this is the most important thing to remember. Today, we're here about the operational part of the business, so all of these services that we provide. But the board obviously have a very keen interest in the strategy over the other side, which is the advocacy and the strategic direction of the company. And when we did the customer survey asking for any topics that you might like talked about through the operational meetings, there was a pretty strong piece of feedback that you'd like to hear about the strategy work as well. So we've invited Michael Pisasali, who's our policy manager, to come along, and during the operational presentation today, he's going to give an update as well. In terms of today's format, we're going to have a pretty short, sharp presentation. The aim is to keep it to an hour. That's from our operational managers. Then we'll have around about a half an hour presentation from DPI talking about the allocation outlook for next year, as well as explaining some of the mechanisms that help and see the allocations build. And that should see us at around about an hour and a half, having plenty of time to what we've described in the advertisements as breakout sessions. So all of the presenters that are here today will be actually available after the meeting, and so are all of the other staff to answer any questions you might have. And what we're looking to do there is give you the short presentation that allows you to get on the road again if you want to. You can identify who it is that you can stick around and talk to if you need, but please, you can feel free to ask any questions during the or at the end of each presenter's presentation if you've got something that you think is relevant for the whole group. But we'll obviously be a bit time limited if we want to get through it in an hour and a half, so we'll probably limit any questions to a couple for each presenter. And if I could ask you just to keep those questions to be relevant to the whole group. If there's anything that's specific to you, then just catch us after the meeting. We're here for at least an hour or an hour and a half after the presentation's finished. With that, I'm going to hand over to Jeff Mann, who's going to lead us into the presentation this afternoon. But if at any point you want to ask him a question, maybe just hold till your handover.
So thanks, Scott. I'm Jeff Mann, a Customer Service Manager with Murray Irrigation. So if you haven't met me before, we can catch up later. And I'm responsible for ensuring that we efficiently and effectively meet your service needs on each day that we operate 365 days of the year. As per Scott's previous slide, I'm focused on water delivery and frontline services. So my slides today will go through the context of the way we deliver services, and then I'll hand over to Josh, who's going to give you an update on the outcome of that service delivery over the last season. So as part of, to set the context, and a chunk of work we've been doing is to understand the journey customers take through the business. So we've developed a model that we call the pathways model, the diagram on the left of that slide. All inquiries are managed through this model with a team of multi-skilled customer service operators waiting to deal with your transactional needs on any given day. The aim of this service delivery methodology is to satisfy your inquiry at the point of contact, and where this cannot occur, we then will triage that to a specialised staff member who'll be able to handle your inquiry. The triage process is focused on assessing the risk and the service level that is involved in that more complex inquiry to drive us to the outcome we need to achieve and the timeframes we need to achieve it within. And finally, all this is in the customer charter. We released that late last year. That went out after consultation, and then that was released, went out to the customer base, and then all that promises is involved in that document. So as part of that, we aim to satisfy all the inquiries at the first point of contact at 80% is our target we're driving for. As you can see, we're currently tracking for this season at 74%, is where we're at the moment. So there's still room for improvement there as we build staff's capacity, as well as we build the systems that support them and enable them to get your answers at that first point of contact. With the modernisation of the company and the Pathways model, customers essentially seek our services through the call centre environment or through our online avenues, through email and the customer portal. But as you can see, our average inward number of calls this season's been 76, with the largest day of phone traffic being 407 on the 24th of July in the supplementary event last year. So as you would surmise from that, that puts quite a bit of pressure on the system, and our data collected over the last couple of years supports that we have peaks and troughs throughout the season depending on certain events. To manage this, we resource plan each day and each week and each month as we move forward to try to meet those peaks where they are known and use an operating model that's designed to support the ability to be reactive when that occurs. So we have staff members who are focused on other tasks, but then we can bring everybody across when they're required to do key activities like answer the phones. One of the ways we deliver the services is through the modes of operation. This is a terminology you would have seen in Talking Water and other publications we've been doing in the last couple of years. These have been implemented to allow for more transparency on how the system will be operated and what service level you can expect during different environmental situations. In running the system, there is always a tension between meeting customer needs and driving efficient operations. This slide breaks down how we balance the tension in the different modes. So mode 1, drought, is where our focus is on maximising water savings, so we operate as efficiently as possible when there's minimal water available in the whole system and externally. Mode 2 is where we drive a balance between providing some flexibility but remaining efficient, for example, where we don't fill channels where there's no irrigation intention shown from customers. And mode 3 is essentially the old or the normal operations where we can provide the greatest flexibility to customers to meet their irrigation needs. And finally, the winter operating mode, where we have to balance the needs of the maintenance strategy, which you'll hear more of from Nick later, the maintenance strategy and providing you with an increased access to water in those areas. So that's playing out now with only a third of the system being drained in this cycling 3-year program and providing longer access for other customers to water. So no matter what the mode of operation is, the key of the operating modes is to maximise your access to water, both through your outlet and through the distribution of resources from the efficient operation of the system. So as an example just of maximising your access to the system, this slide shows the outcomes of the winter operations over the last 3 years. So typically offtakes were closed for approximately 2 months from mid-May to mid-July, with deliveries commencing in August was the old sort of way we did business. Now with the introduction of the winter operations, we can provide longer access, and in 2019 we'll close for approximately 60 days, 15th of May through 20th July. Last year we got that down to 50 days, and all those 2 years are with large works programs, and this year we're closing for only the 30-day period, and we're working with river operations to maximise access through the Wakool offtake for the Wakool customers. So that's, over to Josh to talk about the outcomes of that now.
Thanks, Jeff. As Jeff mentioned, my name's Josh Bode. I'm the Customer Operations Business Manager. Obviously a colleague of Jeff who reports through to Scott. The Customer Pathways model where my team sits, so if you look around the room, the majority of the Murray Irrigation staff here are the customer accounts team. I work with those guys to deal with the more complex issues, as well as got a couple of analysts that look at analysing some data and doing some modelling. And also too, the customer accounts teams deal with the engagement side of the business. So setting up these types of days, the surveys that you guys would be getting via text message, the focus group type scenarios, they're the types of things that the customer accounts teams worked with. One thing we've concentrated on over the last few years is really analysing data more. As I said, we've got a couple of analysts that do this on a daily basis, doing audits, making sure we're compliant around our service levels, making sure we're doing things that we said we would do, and they do a lot of modelling. So with that in mind, one of the things that we do, we model our deliveries. Okay, and as you can see, this is month by month deliveries across the months of it. So the deliveries per month across the year. And what you can see is there's been a fairly big investment in the summer crops, with November, December, January, with a fairly high water use, which is great. Not unexpected after the last couple of years to have an increase. One of the things that does point out though is we're obviously invested heavily in a winter program. Our highest deliveries has been in April, with March fairly high as well. And even in May, after we closed the offtake, I think we delivered close to 10,000 megalitres after the 15th of May. So a really, really big winter program in place. All we ask is if you do have a winter program in place and you're needing to water early in the season, please participate in our water intention survey. It really gives us the opportunity to make sure that we can put water where it needs to be put earlier in the year. One of the other things that we look at is alarming trends, or trends that can tell us, predict what you guys are going to be doing. One alarming trend is that 32% of orders have been placed over the phone, which means our customer base is not utilising the online platform. Now, I know we contribute to that through the modes of operation that Jeff just talked about. Okay, we do put you on 4 days wait during mode 1, so we do contribute to that. But we are contacting a lot of customers to see why they are placing manual orders. You know, do we need to improve the portal? Do things aren't working? So they're the types of things that we're trying to do, and all in the idea of improving service levels to you guys. This is just really a breakdown of the crop usage for the year. The pie graph on the left, on your right, is everything on farm. So great to see that there's been a return of a rice crop after a couple of years off. 32% of our water was used on rice. We will say over on your left-hand side, you can see the Water New South Wales deliveries was about 230 GL. 120 of that was for river operations, and the rest was for our Wakool customers. So really, really positive that 120 that we deliver for river operations helps us with our efficiency, which gives us more water, which allows us to save more water to give back to you guys through Waterwell. As Jeff mentioned before, we're trying to give you guys longer access to the irrigation season. This year, we delivered 40 GL in July. Prior to that, the most we've ever delivered in July was about 1,000 megs back in 2012. So the graph up here shows that deliveries between 15th of May to 15th of August, which was traditionally when we had the offtakes closed. Okay, you can see that we delivered 44 GL over that time.
How much of that went into storage, Josh?
Yep, there was 34. This thing doesn't work.
You get a pen on the side, please.
No, she's on. 34 GL went into storage for the year. 31 of that was through the supplementary event. Yeah, so heaps.
A high proportion.
Yeah, a lot. Yep.
So good utilisation of on-farm asset.
Yep, yeah, definitely. Yeah, and 28 of the 40 was through the Wakool offtake. Just through with obviously the maintenance program.
Do you have an approximation of how much on-farm storage we have in our footprint?
Michael Pisasali might be able to have a chat to that later. I don't know, sorry. No. But it's a good point. So, good point in the fact that we delivered 28 of the 40 out to Wakool. So we're always trying to get better. It's great that we were able to deliver a lot of water in July, which we haven't done in the past, but we're always looking for improvements. And to the board's credit, They've put more money into the winter program this year to try to speed it up so that if that does happen again this year, we've got the winter works out of the way so that we can get you earlier access to water, which comes at a cost. So as I said before, we do a lot of analysing of data and modelling, and we've done that with our customer base as well, so with you guys. So really we've got 5 model customers that we use. 3 of them are actual irrigation customers. So, and the reason why we started to model our customers is so that with the water well rollout, we can actually see what product affects what customer proportion, and then so that we can provide equal benefit across the base. Ugly graph, and I'm hosting one of the breakout sessions after this around water well, so I'm happy to talk to this in more detail. But really, Smallies, is that good? Here are our model customers. And really, as I said, there's three real main irrigation customers, and they are the guys that own more delivery entitlements and water entitlements. You own more water entitlements than delivery entitlements, or you own roughly about the same. And traditionally, they're the old 611 guys. So if you notice, 43% of our customer base have more DEs than WEs. 24% have the same, and only 6% of our customer base has more water entitlements and delivery entitlements. An interesting line graph though is this usage. So the blue column here is the delivery entitlement holder, and the green is the water entitlement holder, and the light blue one is the water entitlement holder that is equal to the delivery entitlement holder. You notice that the DE holder and the WE holder use very similar amounts of water this year. So whether you owned it or you bought it, you're still using the water on farm. As you're aware, and if you saw the video online with my ugly mug in it, we rolled out water well a few years ago. Traditionally we had the resource distribution, the board passed the resource management policy, which then we rolled out water well. The number one priority number one thing I want you to take away from today about water well is that the number one principle is that we get water into the footprint early. So that's what we're trying to do. The earlier, the better. We went out through the focus groups a few years ago and talked to our customer base and said, what do you want? Do you want certainty up front, or do you want a huge volume of water, more volume of water at the end of the year? And it was strongly come across that certainty is the key. So everything we try to do through water well is get more into the footprint early. This year, now including the sustainability product, which was 40 GL, this year we put 168 GL into the footprint. Questions? No? All good? Cool, sorry. So now, we won't sit here and spruik water well or anything like that, but one, I'm proud of it, we're proud of it. It's beneficial and it's valuable. Again, 3 columns. We've got the delivery entitlement holder, water entitlement holder, and our combination. This line here in the orange are your fixed fees, and this is your usage fees. So this is obviously excluding Water New South Wales pass-through charges. But as you can see, the delivery entitlement holder and the water entitlement holder contributed very, very similar revenue to the company. Roughly around $25,000 per customer on average. The water well benefit that you guys received in those categories was about 75% of your expenses to Murray Irrigation. So that really means that if all the water well products that came to you, excluding the sustainability product, that's not in here, if you had sold it on the temporary water market, you would have paid 75% of your Murray Irrigation bill. Use it on farm, make a lot more. It's valuable, we are listening to you, and we're trying to improve it all the time. One thing we are noticing is that our investment in our assets and our upgrading of our assets is starting to pay some dividends through more water back into the footprint. This graph shows that from 2014 to next year, the water that we've actually put back into the footprint. The blue line is the total amount. The green line is the amount minus the sustainability product. So you can see, by upgrading our assets, by having the ability to run our system in different operating modes, which Nick will talk to later, around the work that they're doing with the control system, our ability to not have to put water down channels, our ability to pulse water down channels for stock and domestic, our ability to be able to do that all within the office is giving us huge returns on our efficiency. All that efficiency water is what we can then give back to you. So the more efficient we run the system, the more water we can save, the more water we can put back into the footprint. As I said, even in a 0% year and a practically 0% year, we've put more water back into the footprint than over here when it was 100%. All from the investment in our assets. And the assets giving us the ability to be able to run our business differently. Fairly busy screen, fairly self-explanatory though. I'll let you have a little bit of a look. But really it's summing up the season that was. Traditionally, on average, we'd deliver 600 GL on farm. We almost got there, 575 this year. So really an average type of a year. 50% allocation. As I said, 168 GL into the footprint through the water well. We did sell 40 GL. Probably a really good return is a 91% efficiency. Again, the more efficient we're getting, running the control system different, our escapes agreement, all these taking advantage of the supplementary events, all these little things. I mean, if you look back at the supplementary event, I think the company was able to get about 16 GL out of it, which was worth nearly 2% resource distribution that we gave out later in the year, all because of the maintenance strategy. So if we weren't able to open the offtakes early last year because Nick's team did the good job, we wouldn't have been able to take advantage of that water, we wouldn't have been able to give it back. So all these little things are all adding up together to help with that number there, which then gives us more chance to put water back in. 125 GL carried into the season. Just keep that number in your head till I go to the next slide. So 125 GL carried in. One interesting thing is if you had to talk to somebody last year, and if you had to definitely talk to somebody 2 years ago, they would say that temporary water would never go below $200 a meg. We got down to 70 this year. So at the moment it's $80 to $90 a meg, which is good. Makes things more affordable, makes things more realistic. And the net trade into the area was great. So the last 3 years, even though we've had 0 and 3, and then this year we've had positive net trade in, which is great. Now it's working. I think this is my last one. So really looking forward, self-explanatory. The 125 GL carried into the season, that's why I wanted you to remember that. This year, you guys are carrying in 250 GL, so 25% carryover into the year. You probably looked at the announcement, hopefully you have, or if you haven't, this will be a good surprise for you. We're going to give you 8% once we hit 1% general security, which of Deep's presentation that I saw this morning and you'll see soon, hopefully will be earlier in the year. Looks positive. Won't put the pressure on you, Deep. But we'll give you 8% up front. Now last year it was 5. The board's taken a little bit more risk this year to bring a little bit more water forward, so they should be commended for it. But 8% up front. Then we'll give you 5% water users credit. We are going to sell at a discounted rate again, another 40 GL for the sustainability product. Tess will talk later around why we need to do that and the plans going forward. But probably a good number is that one down the bottom. At 1% general security, customers will have about 400 to 410 GL in their accounts. Our customers have about 830,000 water entitlements, so we're almost at 50%, the equivalent of 50% allocation, hopefully, in July, August. So it should be a good start to the season.
Thanks, Josh. For those of you who don't know me here, I'm Tessa Charteris and I'm the Financial Controller at Murray Irrigation at the moment. I report to Ian, he's our CFO here in the room, so you can quiz him as well if you want a bit later. But like Josh alluded to, I'm going to talk to you about a bit more of our finance strategy. Normally probably you would have heard from the finance department in this capacity, probably more around transactional invoices kind of stuff. I just want to explain to you kind of what we're doing in our strategy space and what we're doing to ensure the long-term financial needs of the company are met. So this slide just kind of covers off our rationale when we're thinking about our financial strategy. They're kind of our key objectives and what will guide our decision making. In practice, really what they do is they work together to bring us towards a business model that reduces pressure on the sustainability product. It's really what we're working to achieve over the long, well, really medium term. As Josh has mentioned, the sustainability product currently is the key to making sure our financial stability is robust, although we are working towards making sure that it doesn't need to be going forward, and that 40 gigs can, all things going well, be relocated through the water well mechanism, and those ratios that Josh talks about change. So in practice, what this looks like, what we're doing, there were some customer focus groups that we had, and the feedback from that is brought into these decisions. The asset maintenance reserve is the fund that we have that goes into replacing, that's the word, thanks Nick, replacing our infrastructure, and what our modelling looks like at the moment projects that we'll have a deficit over the next 30 years to replace our assets. Nick's going to talk to what he's doing in the infrastructure department to remedy that, which has great importance as well, but to remedy this financially, we're currently injecting as much cash as possible into that asset maintenance reserve. And to do this, we're going to need to generate a cash surplus on average over the next 5 years. And this is currently where the sustainability product is doing the heavy lifting and will need to for the next 5 years at least. Like I say, addressing that shortfall can be done from a number of angles, and Nick is going to talk to that from his planning around our assets. So I'll leave that to him. One of the other things we're doing is working on making a material impact to the long-term financial stability by focus on gearing the investments. I know the topic of operational expenditure gets raised a lot, but they've been really strongly interrogated and they're really stable. And the reality of it is they can never give us the material security like leveraging our assets can. It would really just reduce the service that we provide to you, and we don't want to do that. We've also taken a really conservative approach historically in the way we hold our assets. So they weren't generating on their own much of a return. So we're in the process of transitioning those things for the long term into things that have the prospect of long-term growth, such as offshore and equity portfolios and those sorts of things. If investments is something that really tickles your fancy, then the CFO's here, and so am I after the meeting to really talk about details of those distributions. I won't bore you with the details now, but we've just got to leverage those to get us the returns we need to keep growing in that growth. One of the other things is that we've also started investing in our water portfolio, and this is really in its infancy. And it's certainly part of the piece of the puzzle that reduces the pressure on the sustainability product. The board have approved $15 million to be spent on that investment, and we've currently spent $12 million to date, which have all been general security products, or entitlements, sorry. So in summary, what I want to say, what I want you to take away from this is that my team and I, along with the infrastructure and water delivery departments, are really working to make sure that our system is functional in long term and that we have the funds to do that, whilst reducing the pressure on you guys and your resources, both financial and on your water resources as well, to make that happen. That's all I've got. Unless there's any questions, I'll hand over to Nick, who'll...
G'day guys, Nick Warren, for those of you who don't know me, a lot of you probably do. I'm mindful that as far as infrastructure goes, a lot of people probably don't really want to hear about it as long as things are working the way they think they should. So I'll keep it pretty brief, but if you want to talk to me afterwards, please come and see me. And I also know that a few of you have got to go at 10 o'clock, is that right? So if you've got any questions, some of you have probably got my number anyway, feel free to call me. The infrastructure team, basically, there's two functions. It's developing the maintenance strategy, so how we're reliably delivering services to you guys, and then implementing it. So that's the guys in the field that you'll see around the place. The main focus today is I just want to talk about a couple of things which Tess has touched on, which is the AMRR. That's the fund basically we put aside to replace our assets when we have to. At the moment, as Tess said, there's a bit of a shortfall there, so we're working on ways to basically extend our assets instead of having to replace them. So I'll touch on that a bit on the next slide, but basically when we look at our assets, there's, I don't know, a few thousand bridges, all the outlets, all the regulators. A lot of them are like 70 or 80 years old, and on our books we've got to replace them in the next 20 or 30 years. So we're looking at any way possible to not have to do that. So the first thing we'll do is we'll do an inspection on these assets. If we don't have to replace them, we won't. That's great. We'll just change the life of them in our asset register. The second thing we'll try and do is extend the life of them. So an example of that is, as you probably know, the public bridges we've been working on the last few years. So if we can spend less than 20% of the replacement value of a structure and get an extra 50% of the life out of it, that basically puts us in a lot better position for when we do have to replace that bridge, and we're going to have money in the bank basically to be able to do it. So an example of that is, at the moment this year we're working on the Moala Canal, and there's probably 40 public bridges on the Moala Canal, and if we have to replace them in 2043 or something, which I think is about when they're scheduled for replacement, we're going to have to find $70 million. This year we're spending about $2 million on them, and hopefully we won't have to replace them for an extra 50 years after that. So that's the sort of things we're talking about when we say we want to extend the asset life. The other thing we're working on at the moment is removing any redundant assets. So that's working with landholders. Basically, for example, you've got 3 properties next to each other, you've got 5 access bridges and you don't need them all. If we can get them off our books and perhaps give you guys some water in return to remove them as a sort of one-off benefit to both us and you, we're looking at those sort of options, so keep that in mind. We've got 8 of those projects doing this year, so pulling out bridges or drain crossings or whatever they might be that no one needs anymore. We've got them off our books, and that basically leaves money to do something else down the track. And the last option for these assets is if we can't do any of the above, so if we can't remove them, we can't extend their life, or they're pretty clapped out and they need to be replaced, then we replace them. So that's the last resort. The other one I want to talk about today is outlet reliability. That's probably been a bit of a focus over the last 6 months for us. So as you all know, Murray Irrigation's gone from a fleet of death ridge wheels in the field that you got a channel attendant come out, turns a wheel on, you get your water. Over the last 5 years, these have all been replaced, or largely been replaced with Rubicon meters, so whether they're slip gates or flume gates. I basically just wanted to talk through the process there. So we've got all these gates from Rubicon, as have the other irrigation delivery companies, and they've been through sort of a rigorous lab test, tested to Australian standards to make sure they're within that sort of plus or minus percentage they need to be within. We've then put them in the field with their recommendations, and we maintain them to their specifications as well. So as well as this, we've got a couple of guys in the office, as Josh touched on, analysts, and a couple of other engineers who have basically 24-hour vision over these outlets. And I won't go into too much detail because I'm happy to talk to any of you about it afterwards, but it's probably not that exciting for everyone. But there's blokes basically looking at these outlets day to day, making sure that any inconsistencies are looked at straight away. And if there's anything that looks untoward, we'll investigate it. We'll often get someone out in the field, and we can then measure how much water's gone through it versus how much it says has gone through it. So if there's any discrepancies there, we'll work out which way that's gone. And if there's any basically rectification needs to be made, then we'll do that. As well as this, we've basically got what should I say? We've got a program where we get Ventia, who are basically a third-party tester, to come and test part of the fleet each year. So the last 12 months they've done a dozen outlets, say, and they've found them to be on average plus or minus 2% accurate in the field, which is well exceeding the Australian standard. So that's basically just confirmation for us that what we're doing is working and what we're seeing in the office is true, and basically should provide, I suppose, assurance to everyone that what we're seeing is accurate, and they are reliable. Although in saying that, I mean, there's always going to be instances with any infrastructure where it doesn't work the way it should, or it doesn't start, or it doesn't stop, or it does meter incorrectly, and there's probably 3 or 4 key factors as to why that would be, but we do have basically vision over that, and it alarms us if there is things going wrong in the field. But yeah, so that's probably all I really wanted to touch on. The only other thing I wanted to talk about, but it's probably not as applicable out here at Wakool, is weeds, of course, is a big problem this year in our channels, particularly over at Finley and Denny. We spent a lot of time and money pulling weeds out of channels. For whatever reason, it's been a particularly bad year for them. I just wanted to touch on it briefly because it's been the source of a fair few phone calls into the office. So basically we've had a dozen excavators running around pulling weeds out of channels, which is about the only way that we've got to effectively or efficiently do it at the moment. I mean, there's other ways we've done it in the past, such as chemicals and stuff like that. As we've talked about, we want to leave as much water in the system as we can. One of the things people say is if you drain the channels over winter, you often burn off a lot of the weeds, and we haven't found that to be true over the last few years. We've got channels that have been drained 3 years in a row and they're still overtopping by Christmas. So basically, until we can come up with something better, we really only have excavators at our disposal to run around and pull these weeds out of the channel. Like I say, it hasn't been a huge issue out at Wakool, so I'm not sure that it'd be front of mind for a lot of you guys, but it has been elsewhere. So that's basically all I wanted to talk about. So now probably the moment you've all been waiting for, Mick Pizzazali, but I'll say.
Thanks, Nick. Good afternoon, everyone. My name's Michael Pizzazali, and I'm the Water Policy Manager for Murray Irrigation. I've been involved in this role for the last year and a half, working with the CEO, the board, and a number of the Murray Irrigation staff here. And also a few landholders we work with as well. So we've got Croz over there with one of the LHA chairs. And it's actually a really interesting job and thoroughly enjoyed it. Advocacy sits under the strategic arm of Murray Irrigation. So there's a slide earlier that Scott pointed out about operational and strategic. So advocacy sits under that strategic side of things. And today I'm going to give a bit of a focus on 3 themes, which is about water, policy and funds. So they're the 3 things we don't lose sight of: how we can get more water, how we can tackle policy, and what we can do to attract more funds into our region. Today I'm just going to give a snapshot of those 3 and looking forward to catching up afterwards. So the first one is water. There's a pretty important statement that we deliver about half the amount of water today compared to when we privatised. So when we privatised in 1995, we used to deliver somewhere in the order of 1,000 to 1,200 gigs of water against an asset base of about $1 billion worth of infrastructure. And some of that stuff was what Nick was talking about earlier. Today, we deliver about half that water for consumptive use against that same asset base of about $1 billion. So we need to find ways of attracting water back into our footprint. And there are 2 key ways you can do this. The first one is water savings. And that was a theme that came out today. What we can do, everything possible to save water. Every drop of water you save, we can turn that into productive water. So if we can deliver more consumptive water and more environmental water for our channel system, we can save more water. And we can actually then pass those savings on to the landholders. And that's a really important one for us. A couple of things just a note, you'll see some words, optimisation study, and that's about utilising our channel system more effectively. And you'll see some other words called the SIDLAM alternative. SIDLAM stands for Sustainable Diversion Limit Adjustment Mechanism. It's a program that governments have. I'll explain a bit more about it in the next slide or 2. But basically they're projects we're pursuing at ways of putting more water into our footprint, attracting more water into our channel system. We have a couple of key terms which are really critical. And one of them is there must be absolutely no choke to the choke trade rules. And we've been pushing governments very hard on that. And we're actually quite heartened to see they've actually come back with statements saying, no, the choke trade rules won't change from agencies as well as governments. And the second one is we are interested in pursuing all initiatives in our footprint and our position is we're not giving back 1 megalitre of water. So we want to attract funds to do certain initiatives, but not in exchange for any water entitlements or anything whatsoever at all. So we're pretty clear on that position. The second one is, so that one's about water savings. The second one is general security reliability. Now, often you hear comments such as, that has impacted the reliability of general security. We've had a look, there's actually quite a few of them, and we've had a good look at them. We believe there are at least 12 factors that impact the reliability of the general security water entitlement. Why? Well, it's the last bucket to fill. So anything that happens before that bucket gets filled has an impact on the reliability of general security water entitlement. There are 4 priorities that Murray Irrigation is focusing on, and you can see those there in front of you. The wet year allocation policy, the river conveyance losses, the Snowy Hydro RR licence and how that can be better managed, and also some of the reserves and allocation policy. So they're 4 priorities that Murray Irrigation's focusing on looking at. The reason why we're focusing on those is we hope to get outcomes within the next year or 2, and we're working with the New South Wales government is where we can actually make a lot of those changes. There are other factors. I'll give you an example. The South Australian dilution flow, it bugs us. But trying to work with, you've got Victoria, South Australia, and trying to work that at the interstate level, those things can take 10, 15 years to try to negotiate to resolve. It's not saying it's not important, but the level of complexity grows exponentially at trying to achieve outcomes, for example. So they're the 4 that we're focusing on at the moment, mainly because we think we can try to get some change over the next year or 2 and hopefully result in an improvement to the general security. So that's about water. The second one is policy. We currently continue to be impacted by policy, and we still have been from the past as well. I just want to give you 2 examples of those. So a current one I just want to use to talk about is the pass-through charges. So a chunk of your water bill, probably about a third of it, are government charges. We have to pass those charges on, and because we get a bill from government, we have to pass those charges on to you guys. Every 4 years, those charges are reviewed by government. And last year, there was a review, and the proposed charge increase was a jump of 28% of those government charges that we would have to pass on. That's clearly a concern, so we spent some time making submissions to argue against those increases, and also attending and presenting our case at public hearings that IPART held. The latest draft report is that increase is likely to be, instead of 28%, closer to 10%. We've since submitted another submission to say, actually, we'd like you to make it lower. We think, here are the reasons why. But just to give you an example of what we mean by current policy, where it could impact you or our region financially. The latest on that one, by the way, is instead of a jump on the 1st of July, it's likely to be deferred by another 3 months, but we will probably find out something in September, and it's likely to be a bit of an increase in October. If, for example, the fee increase from government charges is 10%, it would jump up by 10%, and then every year for the next 4 years, it's then indexed at CPI, at 1-2%, and that's how the charges go from there, until the next 4-year review where that happens again. So that's just an example of government pass-through charges of current policy impacting us. The second one is one that's been lingering for a while, is the basin plan. We live it and breathe it every day, and the potential concerns to our region. The basin plan, the recovery, or the target says 2,750. What's been recovered to date is 2,035. The basin plan's not over. There's still a gap there of 715. Now, the biggest chunk of that gap is what they call the 605, or this recovery program called the SIDLAM program. Now, the intention of that is, rather than buying water, is to do certain works on ground to negate the need to buy water. So you might have heard some SIDLAM projects like at Menindee or others or things like that, and you would have seen some stuff in the media about that. Some of those projects won't succeed or go ahead, mostly because they're not community supported. The problem is, if they don't go ahead and there's a gap there, a future government can be well mandated to come in and say, righto, we'll go and buy that water. So that's a serious risk, and you can see why. And the absolute last thing we want to see is any buybacks at all. We know how bad it is for our region, and we want to avoid any potential scenario of that happening. So one of the solutions that we're providing or proposing to governments is, well, governments, you don't need to buy any more water. You just need to be like a farmer. Just be more efficient with what you're doing and achieve more with less. We can help you with that. So in our footprint alone, we've got about 2,000 kilometres of rivers and creeks and another 2,000 wetlands. We've got huge environmental assets and infrastructure. We can actually help government water those, improve those assets without the need to recover more water. So that's one of the projects we're proposing. And the reason is this, and the reason why we believe it fits under this SDL offset program, or should, is because, for example, here's on your left-hand side on this graph is the river flows per day. And typically the Murray's run down about here. If you were to cut a slice for our landscape, our channels sit here in the landscape. They sit quite high for a very good reason. Now, if you look at some creeks, for example, the Tupper, or some local creeks or shallow creeks or some wetlands on farm, that's kind of where they sit in the landscape. So, if you were to try to get water into the Tupper and Duringle Creek via the river, you've got to send down the river in the order of 50 to 70,000 megs a day just to get the water high enough to hit that creek, basically. That's a big volume of water, isn't it? Just to get water to that creek. Or you could be thinking with your efficiency hat on, you could use our channel system, which is perfectly positioned in the landscape, to drop water strategically into these shallow creeks at 50 megs a day or 100 megs a day. There's a big difference between 70,000 megs a day and using our channels where you can deliver 4 or 5 or a few hundred megalitres a day and effectively achieve the same or very, very similar ecological outcomes. So that's why we're proposing also a parallel project to government to say you don't need to buy more water, just be a lot more efficient with it. We can help you kick the environmental goals by using our channel system, and you can take this kind of approach. So that's what we mean by a basin policy that we're proposing back to government with a solution rather than the alternative, which we don't like. The third one here is funds. And that's a really important one. We do need funds to recover from policy impacts. So you saw earlier a slide from Nick talking about the liability of our infrastructure. One of the reasons why we deliver half the water today than we did at privatisation is we've lost about 30% of our licence acquired through water acquisitions through government water reform. So that's 30% off our licence against an asset base of about $1 billion. So a couple of things we're seeking. We're seeking funds to replace a big chunk of our infrastructure. One of those items are our public bridges. We've got 416 of them, built back in the 30s and 40s, probably with a design GVM of 20, 25 tonne. Now we cross over them with road trains. Now, so we're seeking funds to fix up and replace that infrastructure rather than us wear the burden of that. And of course, one of the aims is to reduce your fees. So if we can get funds in, it can actually mean less fees we need to charge to cover the cost of that infrastructure. So we're seeking funds. It's not to say we're there yet, but we're placing some very strong approaches to governments to say, we've been seriously impacted. We've got all this infrastructure base. We think it's right and it's just fair that you contribute towards our infrastructure burden that we've inherited. And there's a range of projects there we're pursuing. They're not in the bag, but we're lining ourselves up to seek some of that. The second one is, again, this word SIDLAND comes up again, is if our proposal can be accepted by government, not only does it mean it offsets a basin plan threat, it means water's used in our system, but there's also a very, very big bucket that goes with this SIDLAND program. It's about $1 billion, And we believe we could actually attract about 200 million of that just in our region alone. So people often talk about the land and water management plan days where similar things happen. We did a lot of environmental stuff. It was a huge source of turnover for the community, and that was really important. One of our approaches is to be able to attract those funds into our region and adopt a similar approach to the Elder MP. Where farmers in the community are in the driving seat. There's a lot of farmers have actually spoken to myself, have got creeks and things that go through their farms, their neighbours' farms, and they said, well, why don't you put water on that and fix up my proper crossing so I can cross that creek and fix up my fences, whatever else, we can get things like that happening. So, so that's the main driver behind wanting to access funds as well. In total, we're targeting about $500 million worth of funds for a range of things, and that's what we're trying to achieve for our region. So in summary, our key focus is three things. Again, not to lose sight of, is water, policy and funds. Our approach is proposing solutions to governments that are faced with problems of what to do. It's been really great collaborating with other local advocacy groups to achieve some of these outcomes for our area. But also a key thing to note is we've got a round of meetings planned for July where we like to talk in smaller groups and have more numerous meetings where we can talk about this stuff over a 2 or 3 hour period and really get to the detail. So yeah, I hope you can come along to those and happy to catch up for a chat afterwards. Yep.
Afternoon all, my name's Deep Singh. I'm from the New South Wales Department of Planning, Industry and Environment, working in water allocations. I probably haven't met most of you before. I have done these meetings before COVID hit. So I'm just going to take us through a few things. The general New South Wales overarching allocation approach, a recap of the current water year, some forecasting, and some explanation of how our reserves work that you might see in our water allocation statements. And I'm happy to take questions at the end or have a discussion afterwards in our breakout sessions. So the allocation policy in New South Wales is based on a low risk dry outlook, and you would have read many times minimum flows, minimum inflow sequences, 99%. All these terms kind of mean that we're assuming effectively a low inflow or a drought kind of outlook when making allocations. And what that does is it means that we're only allocating water that we can, effectively guarantee will show up most of the time, and not allocating water above that and then having the risk of having to take it back when it doesn't turn up. So that's the low risk part of that approach. The allocation of water is determined by the water sharing plan. For this region, for the regulated system, it's the Murray Lower Darling water sharing plan, reg water sharing plan. Basically, we assess the resources and then we divvy up the water based on priority of access. So stock and domestic, towns get the first cut, high security, conveyance, and then general security. And there's some planned environmental water provisions in the water sharing plan as well. And in the Murray Lower Darling plan for the Murray water source, the biggest one is the Bumamilwa allowance, and we'll talk about that in the coming slides. In the south, our accounting approach is an annual approach, which is different to the north because they have a continuous approach. Basically what that means is you start 1 July, you run through the year. At the end of June, when you tick over to 1 July, it's a new start with all the account water, except for those carryover accounts, which are general security carryover, and then some carryover in planned environmental water. So yeah, as I said, we make a resource assessment. I'll go through that briefly, just an overarching approach on what that means. And we make an allocation when we can identify that there's extra water available. Conversely, if the resource assessment tells us you've got too much commitment on the books and not enough water to meet those commitments, that's when we kind of, go into shortfall or restriction territory. We haven't been in that since the Millennium Drought, and we just skated by it in the recent drought by just managing a bit of shortfall and not having to put restrictions on. So quickly, the resource assessment process. From a large-scale perspective, what you do is we assess the supply, we assess what water we have physically available to us in storages, what water we can expect to come in the future through minimum inflows, 99% inflows, snowy RAR, for example, as well. We assess the commitments. What liability do we have on the accounts already? So general security, available water account balance, high security, planned environmental water, operational needs, conveyance losses, etc. So we assess those two things separately. We compare and see if the supply we have available is greater than the commitments. That means we have extra water we can allocate. If the supply and commitments kind of match each other, no change in allocations. And as I said, in drought conditions, if the supply falls below the commitments, we could potentially go into restriction territory. So if we can identify that we have some excess water, we'll announce a allocation. The allocation is announced as per the water sharing plan, as I said, based on the priority of license. Again, I'm sure you've all seen this before many times. Quick recap: Murray system shared between New South Wales, Victoria and South Australia. We share the inflows with Victoria above Albury, so we've got inflows into Hume, Dartmouth and Kiewa River. Inflows below Albury but above the SA border belong to the state from which they come. So Victoria has a number of inflow points, a number of catchments that contribute to it. For New South Wales, it's predominantly the Murrumbidgee system with water coming out through the Murrumbidgee River at Balranald or through the Billabong Creek at Darlot, connecting into the Murrumbidgee again through the Yanko system. Because it's a shared resource, it's a shared system, the resource assessment process is a two-step process. The first step is the MDBA is in charge of implementing the MDB agreement, the Murray-Darling Basin Agreement. They assess the resources at the bulk level. They tell the states how much they have, and then we assess the resources as part of our allocation process and the water sharing plan, and then allocate to accounts if possible. So the last water allocation statement that was published was on 17 May, a month ago. Again, we hit 50% in the Murray, hit 100% in the Lower Darling with Menindee coming online. And we completed the payback of the Bumamelo allowance this water year, but we'll reborrow that again on 1 July, and I'll explain that again. You guys can look at our latest water allocation statement to see the breakdown of this current water year, what we've finished up as. But again, in the new water year, we'll start again afresh. So the last distribution we had for New South Wales was about 2,310 GL. And from that, a bulk of the water went to GS, 50% allocation, conveyance, and a payback of the allowance, which was the rules-based environmental water, 350. GS water was 837 here, plus 350 carryover. That's the same information as the previous slide, but in a pie chart. Again, it's in the allocation statement. So, as I described before, we have a two-step process for the resource assessment. The MDBA does one at the bulk level, and then we do one at the New South Wales level. In the previous slide, or even in this table, You can see our resource here is 2310, 2310 GL. This diagram kind of tries to show what that part is in comparison to all the water that's available to New South Wales, or against our name in New South Wales. So you can see that this block here is 2310 GL, which relates to the pie chart in the table previously. And that's the water we can allocate. And then on top of that, we have other water that is against New South Wales entry as part of the Murray-Darling Basin Agreement. So we've got, minimum reserves, South Australia's entitlement flows, conveyance losses to run the river, to run the Murray River, and evaporation loss in our storages. So that's the commitments we have. And on the supply side, we have water in storage, usage to date, IVT, and minimum inflows. So that's off 17 May. Again, when we get into July, we'll have an opening allocation announcement on 1 July, which will cover the entire state. Commencing 15 July, we'll have fortnightly statements to cover the Murray, providing updated information, and regular resource assessments, as I said, every fortnight, and making allocation announcements if we can. This is a breakdown of the water in storage between the 3 states. We've got New South Wales, that's at the end of May, so it's a bit dated by a couple of weeks, but New South Wales, 41%, Victoria, 49%, and South Australia's deferred storage is about 10%. So that's at the end of May. A bit of the water that we have under New South Wales and Victoria also goes to South Australia's entitlement, which is now diminished because there's only a bit of the water year left. And then also the conveyance requirements for the bit of the water year left that we have. In the Murray, the general security, now the way that the balances and the accounts work is, there's allocations made, and then customers order water gets delivered, there's travel time lag, meters have to be read, bills are sent out, the accounts are reconciled, so there's a entire process around that, and there's a significant lag. But based on the latest reconciled numbers, we had 350 GL of carryover for GS to start the year off, a further 837 GL of allocations, about 160, 170 GL of net trade-in, and that's not just trade-in from other valleys, it could be trade-in from other entitlements within the Murray, so from high security, for example, could be going to GS. So we had a total net resource to GS of about 1350 GL, and off that you can see that there's 543 GL used, reconciled to date, 810 GL remaining. However, our carryover forecast is at about 650 GL will be the total carryover for GS into the next water year. So as I said, there's a bit of a lag in this diagram, but just showing how much carryover we had, how much was the allocation. If there was net trade in or trade out, there was net trade in to the GS licenses. This is a diagram from the MDBA weekly report showing inflows into the system. This is all inflows shared across all states, not just for New South Wales. Dark blue line is this year, purple line, or pink line is last year. Significant improvement. On the back of this last year in May, we kind of covered all our shortfall risks that we were communicating in the previous year for this year. So that helped us cover all that potential shortfall risk, and that's where that 3% came in at the end of the water year. But this year, as you can see, significantly better in comparison to last year, and that's helped us not only allocate, we've allocated 50%, We started the water year off with basically no shortfall this year, and we've paid the allowance back completely, and our allocation outlook says that we are not forecasting any shortfall next year. So it's a better outlook this year for next year than we have had in the previous 2 years. Menindee, this is Menindee storage level. At the moment, we're around 1100, just under. The first line here is a line at 480. Second line here is at 640. These are the two main numbers that are the thresholds between when Menindee goes into MDBA control or becomes a shared resource, and it comes out and becomes a lower Darling resource only. So it became a shared resource early May when it hit 640. It'll remain a shared resource until it hits 480 again on the way back down. And the shared resource component is just from 480 up, not the entire amount. And as we go into the new water year, we have a whole new year's worth of losses and everything to account for. So as part of this shared resource, some of it is shared between the states, and some of it is needed to run the system to deliver the water into the Murray, and evaporation and everything as well. Just a recap of how allocations have kind of behaved over the last 5 years. We've got a good mix of years in terms of floods and rain and droughts. So in 16-17, we were at 100% full allocation. 17-18, we got to 51%. And then 2 years of basically zero. And then this year, we're at 50% again. So these are the 5 years that correspond to these 5 years here, showing the rainfall that occurred in the wet season. And the wet season is winter, spring. And you can see that 16-17 flood, significant rainfall, quite wet. We had full allocations. 17-18, average year, near average rainfall in this region, 50%. And you can see this compared to this year, also, around average, around the same allocation. And then we had 2 years of back-to-back drought, and one of the worst droughts on record, except for the Millennium Drought, and that led to these 2 years of basically zero allocation. So the allocation here corresponding to basically the rainfall conditions we've experienced over the last 5 years. In our previous statement, published 17 May, we published our indicative 1 July outlook. As I said, this outlook is much better than it was over the last 2 years, considering we were going into the subsequent year, having experienced these droughts, forecasting significant shortfalls, and we did start with shortfalls. For example, conveyance started much lower than 165 GL, and the water sharing plan requires us to provide 165 GL to conveyance entitlement before we can allocate to GS. This year, we're forecasting obviously full allocations for town stock and domestic, full allocations for supplementary license holders, but supplementary license holders can only take water when there's periods of announced supplementary access. High security will be 97% full. That's effectively full as per the water sharing plan. Conveyance will likely be 50%, which is the full as per the water sharing plan. So no shortfall as compared to the previous years. And general security will likely be low or zero, but we're basically on the cusp of starting GS allocations. Compared to the last 2 years where we spent basically the first 4 or 5 months of the water year trying to fill shortfalls, as we head into the new water year after 1 July, resource improvements as they occur will basically go straight into GS allocations, while also keeping in in mind our requirement to make sure that the subsequent year high priority needs are met. So yeah, as I said, we're on the cusp of basically starting water allocations, GS allocations, sorry. And we've just got the high priority commitments balanced with the resources we have right now. So that, hence why no shortfalls are forecast. We've been talking about the Bumamilla allowance and the payback in our allocation statements for the last couple of months. Previously, we've communicated that the Bumamilla rules require us to have an early payback if there's 4 years of low flows downstream of Yarrawonga. And that trigger was met, so we're in the 5th year. And the payback was due to occur in an accelerated fashion. However, that's not happening anymore. So the payback will now occur as per the normal water sharing plan rules, which is GS will reach 30% first, and the payback will happen. So that's a significant improvement in the outlook for GS water users since we published this statement back in May. And I'll talk about that when we come to the forecasts. Yeah, so I'll address that when we come to the forecast. Just recapping the year, we started the water year off with about 885 resource that we could distribute within the entitlements. And we're finishing the year off with 2,310. So that's some, 1,500, 1,400 odd GL improvement. And I contrast that with previously, the year before that, I think over the whole year we had, I think from memory, about 300 GL over the whole year improvement, compared to about, this from 800, 900 to 2,300. And so once we get over 1 July and we start the new water year, when we publish this our water allocation statement on 15 July 2021, you'll see these commitments come back, a whole new year's worth of SA commitments, conveyance, like losses commitments for the water year. So our allocation outlook, positive allocation outlook, already incorporates consideration of these things. So we've met all our commitments, plus we're not forecasting any shortfalls. So it's a great starting point to see allocations in the new water year. Same thing, so we went from 885 to 2,300 over the water year. So this was the forecast allocations that we published on 17 May, a month ago. As I said, the note here assumes Bumamilla allowance payback is commensurate with GS allocations. So we built this forecast assuming that the allowance would be paid back quicker than the water sharing plan says. However, that's not happening anymore. So in the 15 July allocation statement, we'll publish an outlook like this again. And in that, we'll incorporate those changed conditions. And you should see a sizable improvement in those numbers because the payback is occurring after GS reaches 30% now, instead of starting immediately. So even though, as I said, under the 99% conditions, the minimum conditions, we're still forecasting zero starting point. But as there's no shortfalls forecast, we're on the cusp of being able to use any new resource improvements from now on to allocate to GS. And I just remind people that it's not that anything flowing into the storages now is going immediately to allocations, because we already incorporate a minimum inflow sequence into our allocations. So we already know, based on a low inflow year, which is the 99% year that I mentioned before, how much water is going to flow into the storages over the next water year. The improvement in resource is the inflows that occur above and beyond the minimum. So we need inflows above and beyond minimums to see improvements in resource and then allocations. So this was the forecast we published. I guess it's up to you guys how you interpret what the weather's going to be like, what the rainfall's going to be like, how that translates into inflows and resources, and decide what risk profile you're comfortable with. In terms of the Bureau, their latest rainfall outlook for the next 3 months, July to September, they are indicating that rainfall conditions are likely to be wetter than average. And also for August to October, they're indicating conditions are likely to be wetter than average. Again, these are indicative improvements and not guaranteed allocations. And you can't really translate 75% rainfall conditions to 75% inflow conditions and also then allocations. There's a bit of a difference there. So again, the estimates and they can change on weather conditions and water management decisions and river operations. Just touch base quickly on reserves. Because we went through a particularly dry period, a lot of people were noticing our reserves that we had kept for second year high priority needs shifting and changing year to year, and questions were raised about how those decisions are made. And this diagram here, basically, this line is meant to represent the reserve volume, and so that's the peak of the reserve here. And there's the different sections, 1, 2, 3, and 4, are meant to represent different inflow conditions. And so when we have inflows below minimums, or record-breaking droughts like the Millennium Drought, you'll see restrictions, or you'll see shortfalls like we saw in the last 2 years, and the reserves will be low. And the reserves are low not because we think they need to be low, but because there's not enough inflows to build the reserves enough to assure full allocations for the subsequent year. So because there's not enough inflows to build the reserves, in the second year, restrictions still stay or come into play, or shortfalls come into play. So the reserves are here low, not because, again, we think they should be low because that's enough, but because there's not enough inflows to build them. As the inflows keep coming, it's not record-breaking drought, but it's still pretty dry. We will push that reserve number up as much as we can, noting still we can still have shortfalls in the subsequent year. So you saw in, I think last year our reserves hit 440, I believe, GL in our allocation statement. And even with those reserves, we were still forecasting a shortfall in conveyance. So it was enough, or just meeting conveyance needs. It was enough to build the reserves. The inflows were enough to build the reserves necessary to break even with the second year. When conditions are better than that, what happens is we can see that there's actually more water available to us in the second year through either snowy or more inflows, whatever it may be. Then we don't need that many reserves. We don't need that much volume in the reserve category. So the reserve volume comes down again. So it was quite high last year, 440. Compare that to the way that we finished this year, reserve is 161. And that's because conditions have been much better. We've got water that's available to us next year that we can see that we don't need to reserve this year. And so there's no need to reserve that volume in the current year. If that wasn't the case, the reserves this year would have also been higher. So that's basically a simple explanation of how reserves can change depending on the condition. And the fact that low reserves, it doesn't mean that it's necessarily low because we think they need to be low. It just may be that we haven't got enough water inflowing to build enough reserves to assure allocations for the high priority needs in the subsequent year. And how the actual reserves and allocations play out, of course, depends on inflow volumes and timings. Timings is quite important, actually. The losses, tributary inflows, at what point in the system the inflow is actually occurring and where the demands are. the MDB agreement interactions come into play, and the inflow conditions within a year versus the inflow conditions over multiple years. And what I mean by that is, we saw 2 years back to back of very low inflows, extreme drought. And what that meant was, we went into that drought period with shortfalls, and then we spent the subsequent year trying to catch up the shortfalls we had from the previous year. So we don't always get to start afresh in the new water year if we've got severe drought that lasts over multiple years. There's a flow-on effect. And just a recap of the fact that New South Wales Murray, our entitlement pool, excluding supplementary, is over 2,000 GL, 2,250 GL approximately. Compare that to Victoria's approximately 1,600 GL and South Australia's 750 GL. So from the water that we get as part of the MDB agreement, the water that we get that we can distribute has to be spread across some 2,200 GLs of entitlement versus 1,600, for example, in Victoria. And that will reflect in the allocation percentages. And also considering that, for example, Victoria has significantly higher tributary inflows than we do, they get to support their allocations through inflows from the Goulburn, the Ovens, that we don't get those inflows in New South Wales. That's the end of my presentation. If you'd like to see our water allocation statements, you can go to the website or search for New South Wales water allocation statements in Google, and the top results will be probably the link to the water allocation statement, and you can find the Murray water allocation statement on the website.
Just to round today out a little bit, and there is a handout that has all of these key messages on it, because this is too much to remember. We just thought it would be important to recap what we've been through today, because there's a lot of presentation, and what are the messages we'd ask you to take home. First and foremost, you heard about the lean staffing model, and Jeff talked to the pathways. What we've done is actually weigh up the risk, weigh up the service levels we can deliver with the number of staff we have, and sometimes there'll be a conflict. Sometimes you will have to wait for the answer you're looking for because we're just exceptionally busy. There'll be other times you'll get a response straight away because we're quiet. But the reality is there's a very similar organisation doing exactly the same job we do with the same amount of water north of here that's got 150 staff compared to 100. And I'm not seeing that many differences in service levels. What it does mean is that there are times when we have to make you wait a little bit. But by all means, if you think that's unacceptable, then talk to us, because we can start to address that. But we've struck what we think is the right balance at the moment, and we'll continue to look at that. Jeff also spoke about the 4 operating modes. Again, really, really important to understand those, because it does transition us from saving water in mode 1, and in really tight water years, Josh showed you how important that is to get maximum water in the footprint, versus when we've got a pretty reasonable allocation. And I would suggest that this upcoming season is starting to look like we'll be in mode 3 very quickly under normal ordering circumstances. And the other important one is the new one, the winter operating mode, which is making sure you've got access to water for a lot longer in the winter. So if you don't understand them, by all means talk to us, and we'll try and explain the benefit of each of them in the breakout sessions. Very large winter cropping program being observed by us. A terrible start by the look of things, but hopefully many will be able to recover. Nick, I think it was, mentioned the high water use year. Just reiterating, that was across all crop types, and it was across all outlet types, and believe it or not, it was the Deathridge outlet that was the worst performing. So if you had one of the other meters, you were better off on average. The model customer, we tend to gloss over that a little bit, but it's a really important tool for us, particularly for the irrigation customers, to understand that we're distributing the benefits fairly. Now, that doesn't mean we're going to continue to do it that way. We'll continue to engage and work out whether or not we've got the ratios of the products right. But at the moment you can see that it's pretty balanced, depending on whether you're predominantly a WE holder, a DE holder or a balanced holder. So that's a good starting point. If you're not sure about whether you're getting the maximum benefit out of Waterwell, come and speak to any of the team here, because they'll be able to take a look at your account and what's happened previously and see if you're getting the most out of it. A pretty important message, which I think on top of what Deep's telling us should buoy a little bit of confidence, that there's the equivalent of almost 50% allocation in our footprint available to use once we reach 1%. So that looks like a really good year for us, a busy year for us. Tess spoke about the way we're doing investment, the way where we've come from, where we're going to, the strategy, and there's been some significant improvements there, including the investment in water entitlements, which we heard loud and clear from the customer focus group meetings. Just get in the ring, and that's what we've done. Nick spoke about the channel assets and the way we're managing them to reduce that long-term liability. Very important. That's the other angle. So while we're trying to get a return on our investments over here, we've got to drive down our liabilities on the other side. So that's the strategy, boiled down in a nutshell. And it's really important that in doing that, we're going to be asking you to help. If you've got redundant assets, or if you've got ideas that might see assets amalgamated, please come and talk to us if we aren't coming and knocking on your door first. Technology's everywhere, it's in your businesses, it's deeply embedded in ours now, and we're using that to try and get better results and better service levels, and we'll continue to present data, as Josh described earlier, to help you try and understand how we're operating and how we're likely to operate. The important one is around the metering. We have a very, very robust process for making sure that they are accurate. And doesn't mean, I'm not sure if Nick made that clear, he certainly did this morning, it doesn't mean that things aren't going to go wrong. They will. But generally, and I think Nick, was there a figure, around 87% of outlet investigations this year were driven by our technicians behind the desk before anyone saw anything? I thought it was possibly higher. Yep. So we basically will know if something's going wrong with that meter or something looks funny before you will. And we've got to do a lot more work on that too. We need to be able to explain how the meters work, and we're actually looking at something at the moment that might help with that information transfer. The weed strategy, it's underpinned by channel profiling and desilting. So as Nick said, the weeds are going to grow anyway, and they grow very quickly. A loadia will grow in a week. So we can put an excavator through there and it'll be full of weed again in a week, and we've got the same problem. One of the things we do know is that if we get the silt out of the bottom of the channels and we get the profiles right, you won't get much more than a weed bank, like a seed bank, sorry. You won't get the massive infestation in that same time frame. So we're pretty confident that provided we can get through the system, and it takes time to redo the profiling and desilting, that'll have at least some influence on the impact of weeds. And then finally, you heard that strategic update from Michael, which focused on three pretty complex but very simple things, if that makes any sense, which is we want more water, we want to address the policy impacts, and that's a lot of submission writing and attending meetings, and we also want to attract funds to our region to offset some of those impacts. It sounds simple, that's all he does, but there's a lot of work in that. And that's where that board focus really is, to try and support our CEO and Michael in that policy space. So with that, we're actually ready just to move in, come and have a chat with anybody that's in the room really, but the four people that presented today are actually the key people that you may want to speak to. So with Josh, Nick, Michael and Deep, or you can talk to any of the customer accounts team. If someone's busy and you've got a question but you really want to get on the road, that's fine. We'll take down your details and we'll make sure we get back to you as soon as we can. As I said, please fill in the feedback form. And other than that, thank you for attending, and hopefully you found it informative.